Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to talk about stock splits and whether or not you should buy before a stock split occurs or after, as well as the other factors that you should consider when these things start to happen. Now, this is what I would call an evergreen video because it's not going to be the only time that any stock splits. So I'll talk a little bit about what stock splits are and then give you a lay of the land on how you can decide whether or not to buy before or after or all the time, which is usually the best answer. So remember, a stock split is cosmetic. It basically makes the company appear to be more affordable. Keyword on appear. I can wear this hat, I can take off this hat and put on another hat. I'm still the same person, my voice is not going to change. That's it, right? The hat is cosmetic. The best way to describe it for me is a $100 bill into 520s. The value is still $100, except that I am more protective of the 100. I don't want to spend it. I want to hold it and let it be crispy in my wallet. If I got 520s, I might blow that at a bunch of different places during the day, right? It's easier to spend. It's more liquid. It feels more liquid, even though, again, the value is the exact same. Companies do stock splits sometimes because they want to appear cheaper. They want to be more liquid. They want more people to buy it. Now this, you may think, and what I thought too is, well, if I have fractional shares, what difference does it make? Remember, number one, not every company has fractional shares. TD Ameritrade is one of the biggest ones that do not offer fractional shares at this point in time. So now you open up TD Ameritrade as well as others that may not have fractional shares. The other thing too is options contracts. Options contracts is a topic for another video. However, this is a very powerful investing tool that people use. And when the shares are $3,000 a share, it makes it very, very hard for people to buy and sell those option contracts. For example, an option contract represents, one option contract gives you control over 100 shares. Well, 100 shares times $3,000 a share, that ain't for everybody to trade. That's not really accessible for most people. But if you can make the share or the stock rather $140, $150, that's a completely different story. And that is the case for Google as well as Amazon. Now, stock splits are, I wouldn't say common, but again, like it's been in the news a lot within the last 2 years. Tesla had a stock split in 2020, in August of 2020, and so did Apple. And now this year in 2022, both Google and Amazon are also doing stock splits in June and July of this year. So the question is for you, does this mean you should buy it? And when they split this summer, should you buy before or after? Here's the way that I would look at it. I would not, I repeat, would not buy any stock based on the split. So just because it's splitting is not a trigger for me to invest or to not invest. That's not what I'm looking for. I think the best answer is to see, do I like the company? Do I like what they've been doing? Is this something for me to invest in, regardless of whether they were splitting or not splitting? Because again, the value is not going to change. But I've got a few historical examples that you might want to be aware of. Now, we talked about yesterday, Amazon, before today, they were down 16%. Yesterday they were down 21%. Today, before the market closed, they're down 16% in the last 6 months. They were down about 5% for the entire year. That's something you need to consider, right? If it weren't for the stock split, would you still invest in Amazon? That's a question that you have to answer for yourself. So take the stock split out of it because, again, that doesn't really change anything. There's some external factors and some historical factors that you do want to pay attention to. So, for example, if you were on Twitter, you saw this earlier today. Apple did their stock split on the 28th of August in 2020. At that point in time, from 2020, from the time they announced the stock split on the 28th, right, August 28th, 2020, until August 28th of 2021, Apple's stock grew 19%, but the stock market grew 30%. So the stock split didn't really help Apple all that much because I could have gotten basically 11 to 10% more money by investing in the overall stock market. Tesla did the opposite in that Tesla grew 65% during that time frame from August 21st when they did their stock split in 2020 to compared to the 32% for the S&P 500 during that same time frame. So again, they did their stock splits about a week apart. Apple underperformed the stock market. Tesla overperform the stock market. But here is the other thing. Remember, external factors, context is extremely important when it comes to the stock market. It's not just, oh, this grew this percent, therefore it split, it did this, I'm going to invest. Remember, Tesla was also added to the S&P 500 during that time frame. We did a video on that, and that was one of the reasons why I became more bullish on Tesla. When you get added to the S&P 500, that means that every one of these huge index funds that hold the S&P 500, which includes 401k plans, they also have to sell some company and buy a whole bunch of shares of Tesla, which is what happened. And that's one reason why Tesla shot up 65% compared to the market over that time frame that was only 30. That's an external factor. It wasn't just, ooh, stock split, boom, stock goes up. It's not always that simple. And there's one other thing, really, maybe even three things that you want to consider when it comes to both Amazon and Google and their stock splits this summer. Number one, we are still in the midst of a war, and by we, the United States technically is not in an actual war at this point in time, but that could change. Right now, the war, right, is affecting cost for everything. Amazon also announced that they're not servicing Russia for any of their goods and services. That may impact Amazon, right? We know that cost of oil is going up. Guess who drives trucks right now? Amazon does, to go and ship and deliver things to us within 2 days or whatever it's going to be. So if those goods are going to become more expensive, or it's going to become more expensive for the company to drive those vehicles and maintain those vehicles, then that may cut into the profits. When earnings comes out, that may hurt the company. We'll see, right? That is an external factor that, stock split or not, that might be something that you should have on your radar. The other thing, we still are dealing with supply chain issues. We're still dealing with inflation issues, which does tie in to the cost of oil. We're also dealing with what the Federal Reserve might do next week. They are expected to raise interest rates moderately, but again, we just got an inflation number today that inflation was up more than 7%. That ain't good. The Federal Reserve is going to have to respond. And what we've known for this year before the news about Russia and Ukraine, is that tech companies, Amazon is classified as a tech company, wasn't doing well because of the specter of raising interest rates. And that might actually happen next week. Again, that's an external factor. You might want to consider that before just jumping into the split, because it's not the split that's going to hurt you. It's oil prices, inflation, the Federal Reserve. And you have this thing, which I think is actually a positive thing. Amazon also announced that they are going to do a $10 billion or up to $10 billion in a stock buyback program. This means that Amazon is going to spend $10 billion on its own stock. This generally inflates the price. It helps the company to grow, because when people buy the stock goes up. Well, if you are buying your own stock, the stock is going to go up, and they're going to spend $10 billion. Now, generally, when this happens, Apple has done this. They're one of the biggest people who buy back their own stock. This does actually help the company grow. And for Amazon, it's probably, in their eyes, this is the right time to do it, right? The stock is low compared to what it's been over the last year or so. Therefore, you buy it low and it continues to grow, and it helps Amazon look even better. That, to me, is the biggest news. If I were going to buy more of Amazon, because I hold it on public already, if I were going to buy more, I would have done it because they told me they were going to do a buyback. I even did a video about banks and how they were going to do their buyback like a year, maybe 2 years ago. So feel free to go back and check that one out. But this is something that does help to bolster the company and helps it to grow. Now, I could argue that it's a little artificial, a little manipulative, as opposed to you just selling more stuff and just doing better as a company. You're just going to buy back your own shares and kind of pump yourself up. That's a fair criticism. That is totally a fair criticism. However, as an investor, if you already hold shares, that buyback program is going to help you in more ways. So that is, of all the things, I think the buyback is the best positive indicator that the company could grow in the future. However, that is one good thing versus the 3 or 4 things that are negatively going to impact Amazon and everything else, Google included, right? I hold Amazon and Google, but still, interest rates, war, inflation, all that stuff, the Fed, all of those things that's 4 to 1. And that one thing is only positive for Amazon. I didn't see any news about Google doing a stock buyback. Is that a reason for you to invest? you have to sit there and consider those factors. You have to go back and consider those factors outside of the stock split, because again, the value doesn't change. The value does not change. When you log into your account on, I think it's June 6th when it happens for Amazon, I think it's July 15th when it happens for Google, it's going to look like the value change, but I'm telling you right now, it is not. These are the real factors that you want to pay attention to. Those who don't are going to buy into Amazon today or tomorrow or right after the split and then be very disappointed because they thought that the split in and of itself was going to make the company go higher without paying attention to any of the other factors. You do not want to do that. The best way for you to decide whether Amazon or Google or any company that does any split for you is to go through that three-step research process. We talked about it. We had a whole video on it. Go to the search column, hit the channel button, hit search, and maybe I'll put it in the bio as well, and go see how, you know, what it is that you want to pay attention to. Reading the news, seeing how well the company has done in the past, and then going to check some of their earnings reports and information. That is the stuff you have to do to decide whether or not you should buy before or after the split. Personally, y'all know my answer. It's dollar cost average over here. Split, no split, buyback, no buyback. I was gonna buy anyway, right? All right, so that's it for me. I'll talk to you guys later.